Morning, Alpha Traders. Let's go over in this Discord. Let's load up. Ho! Who's in here? No, we got some people moving today. Literally. Matt. Matt is on the move. Yeah, let's share that chart. Boom. All right. Let's see here. Oh, the wolves are waking up, ladies and gentlemen. The wolves are waking up. All right, let's get a peeky poo here. What we doing? What we doing? Bitcoin on the run, as usual. Yesterday, look at the wick. Right to the third standard deviation normal distribution. Powerful move, man. Talked about this yesterday. That when, let me scale this down a little bit. That when Bitcoin's ranging around, most times you're going to see that range inside the 90 or the Jesus, the 68.3 Laplace distribution range. Okay, whoops, scroll right back up here. Ding, ding, ding. There we go. So right in this area, right, the two white cross lines. When it really starts running, you start hitting these normal distribution levels. There was the first little pullback, right? You hit the 1 SD. Hold on for a second. Let me see something on this chart. Oh, wow. Yeah. Hold on for a second. Man, that had such a massive move. Here's the 68.3 Laplace down here. I knew something wasn't right. This is the 95.4. Wow, man. What a move. Okay, so 2 SD, 3 SD. But usually when you're ranging, which look at the daily range, fairly tight, definitely under 1%. So we're going to get a trending day. Immediately jump outside the 68.3 Laplace. First standard deviation, wick right to it, pull back. Second standard deviation, wick right to it, pull back. Third standard deviation, right? Then you ended up on this 4-hour candle, the wicks to the white line right here, 95.4 Laplace to the downside. You think some over-leveraged traders got wrecked right there, didn't take their profit? Of course they did. Happens all the time. I guarantee you we go over here. Here, let me pop up. Let's pop up the Bitcoin liquidations here. Check the last 24 hours. You're going to see some shorts going bye-bye. I'm sure. Let's see. Oh, yeah. 144.18 million. Oh, boy. There you go. There you go. Look at everything in the red, right? This is all the liquidations across crypto. Just ridiculous, man. Guys, stop using leverage. You do not need leverage in a volatile market. Thank you. Thank you. Got one of my favorite teas on today. Second Amendment is my first priority. That's just how I roll. What can I say? Okay, let's get back at it here. Oh, see, we got the warlord in here.
Hi, guys.
Hello, back from raiding neighboring villages. I see. My man.
I'm pretty excited. I'm loading up my pro package on TradingView this evening, more than likely.
Yeah.
And then I'm deciding if I'm wanting to take $100 to Solana and just trade the hell out of it, so I can buy some Solana things.
Yeah.
Or if I should be a big boy and just sit there and like brain-numbingly turn $100 into 101 trading Bitcoin. But if I do that like a million times, or eventually it'll get to the number where it's like, you do it a million times, it's a dollar trade. So, yeah.
Yeah, you know. That is definitely the way to do it. No leverage, slowly build an account. And, you know, get up to half a Bitcoin, whole Bitcoin.
Can I please ask?
Yeah.
I'm a little bit of a, I'll be brutally honest. I'm a little bit of a brokey in comparison to how much someone's willing to spend for a sat.
Right.
But if I'm trading, right, and I'm just like hammering, I'm going to be doing like, hopefully like 150 trades in a day, you know, and I want to scan that wallet to see if there's any rare sats or like uncommon sats. Yeah. And now I don't know if Carlo and them, because they're partnered with the Raresat Society or one of these Raresat companies.
Right.
We could get some utility to scan our Bitcoin wallet that we choose from the portal to know if there's a rare sat or not, then obviously WAGMI Beach can take a percentage cut or whatever for providing the service. So, and then the rare sat people buy it from you. So let's say the going rate is $400 for a sat. I don't know.
Right.
You get $300 for it. WAGMI Beach, I would say for commission broker, like anywhere from 1% to 5% or something like that.
Right.
Or more. And the person walks away with $295 or $280 and then goes buy a whale.
Right.
Right?
Yeah.
So the set they buy the Solana whale. Like, so I don't know if, like, I sort of do annoy follow every now and again, but I really dig if we could get something like that, because I don't know if you have to buy this NFT of these rare sat societies to do that. Because if I know that, then I will save up and I'll buy one of those NFTs. Because it's like there's no easier way to turn money into more money if you necessarily don't need to utilize that sat, you know. So there's that.
Yeah, look what Peter Shifty's doing, right? He's buying
What's he
ordinals
doing?
because he's in, he's in the thought that single satoshis are going to be worth as much as a Bitcoin. Where nobody was on that live stream when he was speaking to let him know, hey, bud, many sats have already sold for 1 Bitcoin. You need to catch up. You don't just jump into a fucking a movement, after it started because you're king shit of gold or whatever and think you know what you're talking about. You need to do some research. Catalina Whale Mixer has had
no bound.
Yeah, it's insanity. It's insanity, man.
Yeah.
But yeah,
Sorry to bring it up, but yeah, sorry to bring it up a waffle in the start here. Hopefully, it doesn't ruin anything.
There are
I think it would
some
be
people.
really dope.
Some people have already. There's ways that some people have already created some utility in some code where you just put your wallet address in and it'll just search for uncommon sats and stuff.
Do you know, or should I like ask someone like Yasha?
Yeah, who? Let me see here. Let me ask in the Telegram real quick.
Oh, thank you, Chief Bilbo. Asking in the chiefdom chat.
Here, I'll do. There's there. I don't want to interrupt what's going on in there. I'll
Sure.
ask though.
Sure, thanks.
Yeah.
Thanks for letting me know.
I'm pretty sure there's a few though. I'm pretty sure there's a few. You know where I saw a couple getting posted? Go in the Nakamoto Twitter chat.
Yeah.
Yeah. Was it a couple of those guys? If you even scroll up, although I don't think there's a lot of history for some reason, but it's in there somewhere.
Or you can just read docs.ordinals.com, all about sat hunting. They even explain how to do it in non-Bitcoin core wallets.
Thanks.
So WAGMI.
Thanks, Cliff.
WAGMI Beach has
URL
partners.
about to be posted in the.
Sure. Yeah. So no. WAGMI Beach has partners, and I'd like to use the partners that WAGMI Beach uses. Full stop.
Yeah. No, I agree.
Right? So like brand loyalty through and through. I don't know how to put it, but that's just like just some.
Well, anyway, I sent you the official ordinal theory guidebook documentation.
Sad hunting.
Sad hunting.
Problem is when you click on these things, they get your email address.
No, that site does not get your email address. That's ordinals.com, bro.
Okay.
Yeah, you're all good.
I'll check. But anyway, I appreciate it. Yeah.
Yeah, man.
Much love.
So yesterday, 3SD move.
I know that site. I know it well. That site's fine.
Right.
Sure.
Total yesterday, almost the 9% move on Bitcoin. Hey, this is how Bitcoin does it. This is how Bitcoin does it. You'll have one day. You'll have a 1 day move where certain commodities, like Peter Shifty, you won't see a move like that in a year. It's pretty funny, man. It is. What a great move, though. 3SD. We haven't seen the daily 3SD move in a while.
It's up like 20. It went up like 21% over 6 days.
Yeah, man. It's insane.
No leverage needed.
No leverage needed. Exactly. This is the whole point. Guys, leverage is poison. It has its place, but that place is not in volatile markets, man, like cryptocurrency especially. But if maybe you haven't noticed, all the markets are volatile, right? Be careful out there, man. This is what we teach here at Alpha Trading. Guys, first off, you don't always have to be in a trade, right? You don't always have to be in a trade. There's a lot of people out there nonstop. Bam, 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 bam. A lot of the times on the losing side, which is unfortunate. But a lot of people, you get swindled into thinking these people that are selling strategies out there know what they're doing. If you see anybody out there, for sure, you see people out there pushing traditional TA strategies, and a lot of them aren't even aware of it, right? Because you're in this echo chamber. People talk about all the time how those indicators lag, right? But nobody acts on it or asks, why do they lag? Well, price action follows returns. That's why they lag. That's why we always talk about here at Alpha Trading that if you're behind the 8 ball, guys, you're going to get destroyed out here. If you knew the behemoth you were up against, these high frequency trading firm algorithms, you would drop traditional TA in a second. You would reevaluate everything you've ever learned about trading these markets, just like we all have. Just like it's not like I was hatched, right? And I just popped out going, I'm a volatility trader. No, we've all been there, man. We've all been in the echo chamber. It's not a healthy place to be. There's a lot of argument going on. Think about this. You got a big group of indicators. They're all lagging, and you literally got all these different people arguing. My lagging indicator is better than yours. It's almost comical at this point. Where you come to the Alpha Trading Discord, everybody's using the same information, right? Everybody's using the VEPS. There's no arguments at all. It's we have a lot of indicators that people can build their own strategy with. That's what we've tried to focus on. And you'll see, like, especially all the founders, the people that are in the Discord, the members, everybody uses it a little bit differently. They put together their own strat. And that strategy is part of your edge, the overall edge. There's people out there that just think an edge is a group of indicators. Guys, that's the smallest part. It really is. That's the smallest part. Risk management, huge. You have to understand risk. There's no doubt about it. And if you're using leverage in cryptocurrency especially, you're not getting it. You're not getting it at all. That is not risk management. People are like, well, I'm using like cross leverage and I'm only using 2% of my account and I'm going 100x. Show me how many times you've won that trade. Because I'm telling you right now, it's a very low percentage. That's why you're probably using cross leverage, because it's a horrible, horrible strategy.
You are not getting money back. Get out of my way.
When you have a volatile asset like Bitcoin, guys, you can trade without leverage. And if you are making several trades a day and you're just continuing to build and build and build, you'll be surprised over a 6-month period how many sats you can stack. And then you can start really using a risk management strategy because what do we do here at Alpha Trading? We trade low time frame volatility. So I personally have I have 2 workflows. I have my main workflow that at the beginning of every trading day, I'll go down through, right? That's like a daily time frame, a 4-hour, 90-minute, 45, 33, and 15. That's going to give me my daily bias. And when I'm talking about my daily bias, where to put risk on. If I'm scalping with my bias, full risk. Say I have a Bitcoin in the account. I'm trading with that whole Bitcoin, right? That's a lot of money. But here's the difference. I'm not using any leverage, right? I don't have $2,000 in an account and I'm going, 15x or 10x, 15x? I mean, that's ridiculous, man. So when I'm trading with my bias, I'll use the full power of my account. If I'm counter trading that bias, guys, I'll pull 90% back, right? Maybe I'm trading with 0.1 Bitcoin. Because I know when I'm counter trading that bias, the moves are going to be swift and there's a higher probability of correlation breaking. This is the volatility correlations for all 3 lengths. Look at all the breaks in correlation. You got to know what you're doing. And so that, like I said, risk on when I'm trading with my bias, risk off when I'm counter trading that bias. And so that's the first workflow. My second workflow is for entries, 9 minute, 6 minute, 3 minute, 1 minute time frames. That's where I'm getting my entries at. I already have my bias. Now I need to figure out the entries. People are literally up here on the 4 hour, even like an hour time frame. You obviously don't see that on my chart. And people ask, why are you use all these strange time frames? My first answer always is because you're not trading them. That opens their eyes. What? Exactly what I said. I trade these time frames because 99% of traders don't. So not only am I in front of the 8 ball using real-time information, right? But I'm front running your time frames too. And I'm literally scalping these low time frames with the high frequency trading firm algorithms. That's where you want to be at, right? That should be everybody's goal. Because if you're trying to swing, there's another thing. People are trying to swing trade volatility. All the YouTubers out there, what are they teaching people how to do? A lot of them, first thing they're going to say, don't trade low time frames on crypto. It's too volatile. We laugh when we hear that kind of stuff because that's where we thrive at. And then we laugh at them because they're teaching people how to swing trade volatility. And then people wonder why they keep getting knocked out of positions. Why? Well, you're putting a stop loss in the system. Guys, you're not professional traders. You're gamblers. You're getting into positions on high time frames, trying to swing trade an asset. And when you're swing trading a very volatile asset, good luck. Good luck. That's why you see BTC make these massive moves. And when you see these big wicks, that go to a certain area and then pull back up real quick, guys, hello, you're getting liquidated. There's a reason. These exchanges are running algorithms that give them an idea where everybody's setting their stop losses, their take profits. Why in the world? This is literally like going to the poker room, sitting down at the poker table. Everybody sees your whole cards, every hand. You're never gonna win a hand, ever. If you got a great hand, people are just gonna fold, right? I mean, it's ridiculous, man. You cannot continue to show your cards. Stop putting stop losses in the system. Stop putting take profits. You know when I put a take profit? When the volatility is taking hold of that asset and it's running. That's when I'll throw a take profit in. Because at that point, these algos on the exchanges, the exchange operators, they got bigger fish to fry, right? They're dealing with a lot of other stuff at that point. Okay, they got to protect their own interests, make sure that they know where everybody's take profits are, stop losses are. They've already got that down. Now they're trying to get their action, right? So you got to be careful out there. Monitor your trades. Sit at your workstation. Set out a time every day when you want to trade. It's pretty simple. Everybody's like, I want to be a professional trader. There's a lot that goes into it. You got to build your edge first. Risk management's the biggest part. Okay, ran over. Dun, dun. Let's go to the 4 hour. Because what do I see the 4 hour doing right now? Setting up a lot of hidden bull div, right? A lot of hidden bull div. You got the returns oscillator down to the second standard deviation band. That's right. Anybody new that's watching, this is a returns oscillator. So someone in traditional TA, what oscillator are they using? Most likely RSI. Guys, RSI is built on price. Price doesn't follow price. When I see people using RSI for divergence or even for directional moves, oh man, you're using a lagging indicator. That's why divergence plays really never work out. If you do get in a div play, number one, you're going to have to front run stuff, which is dangerous using the RSI. Not with the returns oscillator, right? Because price action follows the returns. This is what we're trying to get people to understand. The high frequency trading firms understand it, right? There's a reason why they are the high frequency trading firms. I'm not talking about hedge funds and shit. These high frequency trading firms, when you see hedge funds getting liquidated every day, who do you think's liquidating them?
The banks.
That's what we're trying to do. We're trying to get people to take their trading career into their own hands. Stop giving people your money to trade with. Just stop. It's ridiculous because those guys don't know what they're doing. They get liquidated all the time. It's insanity, man. It really is. When you learn the VEPS, guys, if you understood the power at your fingertips, everybody would be doing this, but you're in the echo chamber, right? 99.9% of the indicators on TradingView are traditional technical analysis. Most of the indicators are from us, the VEPS. There's one other camp, but like I've said before, this is why we are a friendly group of people, and I love reading this just because it is awesome. Let me go up here and find this again. Let's see. Where is it? There we go. Let me see here. Where is that? Oh, what'd they do? Change it again? Nope, that's not it. Give me a second here. Where the heck was that at, man?
Hello, everyone.
It doesn't matter. But anyway, literally updated all their scripts, all their volatility scripts to say, hey, more or less, everybody on the TradingView platform is too dumb to understand this stuff. Who does that?
Hey, official MBD, good for you for saying hi. Welcome.
Yes, but yeah, who treats people like that? We don't. We don't charge anybody to come in our Discord. We don't charge for education. We have a free volatility starter pack. We have a free 2-week trial for our massive stack of indicators. I think you get about 14 with the free trial. But we'll be the first ones to tell you, look, we don't want you coming straight into our Discord and buying our indicators. Don't do it. You got to learn the basics of volatility trading first. Because obviously you're going to come in, you're going to want the free 2-week trial. By the end of the 2-week trial, you maybe have barely got a little bit of just the volatility down, right? A little, maybe some of the tendencies of volatility trading. You really got to get the basis. I recommend at least a couple months working with that free volatility starter pack. Then come get the free trial. Start building a strat, right? And then if you do want our indicators, hey, we don't have a problem at all. Most people that build trading systems like this, what do? They quite possibly might start a high frequency trading firm. We don't go that route. We're trying to share this information with retail traders to get them out of this losing streak. A lot of people are like, no, I win trades. And I'm always like, well, I mean, would you be willing to share your P&L? Can we see your P&L? The last person that I bugged because they were always just talking trash showed me the P&L. It was like 38% or something. And he was like, excited about it, that's a good P&L. And I was just like, what the hell? Conversation over. I don't even need to talk to this guy anymore. Obviously, he's an idiot. So, where you get some P&Ls in alpha trading, very high, very high. I used to show mine, right? I mean, I broke into the FTX P&L leaderboard as a single trader. Those are all companies up there. High frequency trading firms, hedge funds, things like that. Then there was little old Bilbo. I think the highest I got was 17 or something. They only show the top 20. And that's not tooting my own horn. That's telling you that the indicators that we've created, guys, you get a leg up on almost every other trader out there because you're running with the algos. Do you think the algos are swing trading the 4-hour or the daily or even the 1-hour chart? Guys are down here. They're on the 1 minute and the 30-second, ripping trades one after another, providing a shitload of liquidity to move these markets, liquidating people up, down, all around every day. You can go to like crypto liquidation charts and just look at all the people every day getting liquidated. And yesterday, a lot did, right? What was it, 150 million or something? Close.
Yeah, thanks.
Pretty insane. Pretty insane indeed. And right now, right, BTC setting up this hidden bull. You got lower lows on the returns oscillator, higher lows on the data set. For example, Now, and I don't know. I haven't even looked it up. I haven't pulled this script up in I think maybe a couple times at the beginning of last week. Let's look at the relative strength index. Strength of what? Price? Slap myself. Okay, so there's RSI. Guys, can you already see it? Here, I'm going to change up. Oh, look, RSI got some fancy new colors in it. You got to love this shit. Let me move this up. What are they doing? Hey, let's jazz up the RSI and put some cool area color. Okay.
Yeah.
Yeah, it's sexy.
Color code the area
Yeah.
to the faded background.
First off, let me take this RSI. Let's change this color real quick. Boom. Let's make it white so you can see it a little better. There we go. Now, full disclosure. Pull up the settings on the returns oscillator. Inputs. 7 length. Okay. My returns oscillator is set on a 7. I imagine default right here on the RSI is probably a 14. Yep, here, let's switch it up to a 7 so there's no fuckery going on. Both the same lengths. Hello? Hello? Right? Now, here lately, yeah, setting up a little bit of hidden. But look, you're up here in the so-called overbought zone. Actually, I'm kind of surprised the RSI is even showing a little bit of hidden. Usually it doesn't. You're going to see a lot of really bad moves on the RSI. Let me see here. Setting up the bear on top. Yeah, hey, for once, let me see some. Let's go down here on the low time frames. Hey, RSI, what are you doing here? Making me look bad. Trying to find a good example.
Up is up. That's the timers of mean reversion.
Yeah.
So if you're looking, here's a good example. Is the outlier event. All right, so if you go back to whatever time frame it was where it was above the mean and then our RO was below the mean, hitting an outlier. What that's telling you is that the candles have gone up and down, up and down, up and down, up and down, and it's printed the market sideways, which has put returns negative, which means there's been more down candles than up candles. So it's pushed the percentage returns into its outlier event, which is the reason why the RSI turned around. Okay, because the RSI isn't mean reverting.
No.
The 50 mark means nothing because it's not a spring, it's a string, if this makes sense. Where logarithmic is like a string, it just keeps this string of tension through.
Look at the big brain on the warlord.
Did
you say string and spring?
Hidden bulls and hidden bears as cleanly. And when your RSI is usually pointing up is when your RO is mean reverting through. And that's when that RSI signal will be true. Yeah. So yeah, there's a bunch of things that happen with these things. Especially if you do have short time frames and stuff, this is the edge, is the RO. And all you're doing is you're waiting for, as soon as that RO moves into mean reversion over there, then you know that the RSI has opportunity to break that little white line.
Yeah.
But it won't be touching the white line, but the RO will.
Yep, 100%.
So those are the differences. It will just be pointing up really steep the RSI.
So let's go back where this is going sideways right here. You can see the RSI, you got a higher low. Not on the returns oscillator. It's a lower low. Setting that up, right? Setting it up. Right here at the top, right here. Let me see here. Is the RSI showing a little bit of bear right on top? A little bit. Yep, a little bit of bear div, right? Here was the returns oscillator catching it. But the whole point is to go down here at the start of the move and see if the div is building, and the RSI is not showing it. Returns oscillator definitely is showing it. And most of the times it's a dramatic difference. Maybe I caught the RSI on a good day. Hey, maybe the RSI is transitioning. We're in this crazy world. It could be, maybe it's identifying as a returns oscillator today or something. Let me get this thing off here. Thought I'd bring some comedy into it. Hopefully I didn't offend anybody. We live in clown world. Everybody needs a laugh. Jesus. That's just an
So,
example. Returns
yeah,
oscillator,
so
way more powerful.
I'll quickly say this.
Yeah,
Let's say the
continue.
market rips. So what's the price? 30 grand. Let's say it moves to 35 grand in like 16 hours. So a multiple 4-hour candle. The saying of the RSI can't go any higher, bro, comes because you can't see that the RO is not breaking back down into the top side outlier. So whatever the pink line is or the blue line, it hasn't broken back into it. It's floating above it. It's outside of the standard deviation move or whatever it is. Okay?
Yeah.
So when the RO gets to the blue line and it breaks out there, that RSI hits the ceiling and it looks like a square. Right?
Gotcha.
All we're doing is we're just waiting for that sucker to just cross back into that outlier event. We have statistics, probabilities, blah, 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 positive drift. We know it's going to lift higher. This is the point it's going to cross in. Weekly mean, monthly mean, VRE.
Yeah.
And thank you very much. Goodbye. So that's how you use those. Otherwise, you'll keep on selling. Like this is what you get caught up with an RSI. Everyone can trade a bull market, I'll say that. But where the RSI gets blown up is when it turns into a square and it hits the top, telling you it's like maxed out, just because 7 candles went up in a row. Now it's maxed out. So it could be $1 difference and the RSI will hit the ceiling. You don't know when it's going to dump.
Right. Totally.
Whereas the returns oscillator will be more than likely sitting at a mean reversion, looking to mean revert to the downside. And that's the clean signal.
Oh, for sure. Yeah, when you learn how to use that returns oscillator, it's real powerful. Yeah, you can see yesterday, right? Had a little bit of move on SPY. I'm over on SPY now. Rejected off the reverse wave trend. Dumping back down. Pre-market down again. Go up here. Having an outlier too on the 15 on the slow time frame. Setting up any no divs at all. Clean, 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 clean. Lower lows. Lower lows, lower lows, lower lows. Let's go over here on the VRE. Take a quick peek here. Second day in a row, closed below, actually, or opened up below the daily range. No, actually, 1, 2, yeah, second day in a row. Third day in a row, my bad. Third day in a row, gap down pre-market, below the daily. And what usually happens? Remember when I said that pull-up right there, right? Where it rejected off of the 15-minute reverse wave trend. Here's the 15-minute chart on the VRE. Where did it reject? Top side. Bottom side of the weekly volatility range is this red dotted line under here. Here's the center of the weekly. And the top side of that daily range. By the end of the day, right back down. First standard deviation to the downside. First standard deviation on the downside. I just noticed gold back down 1920. Right? We've been talking about for literally about 6 weeks how gold was going to pull back inside 1900. Heard a bunch of gold people crying. No, not happening. Gold's stable. Gold's good sound money. No, it's actually not. And people are buying paper gold. What are you doing? If you're going to trade heavy metal, get your hands on the real deal, man. It was easy for me. I lived in Carson City, Nevada. There's a gold and silver shop on every corner. Tons of it. Safes full of gold and silver. You can buy as much as you want out there. Not a problem. Wow is right. So we were talking about gold dipping below 19 because of the VEPS. Right? The gold was outside its power mean band to the top side for way too long. It's got to come back, center down, back on the reverse wave trend, maybe bottom side of the power mean band. Anywhere from literally, there was some 1800 numbers, like 1800 to 1900. But from what I was seeing, I think it was like 1890, right in that area, was the pullback to some reverse wave trends on some macro time frames. So good stuff. It's good to see gold. Not because I want to see gold dump, just the VEPS were telling me look, gold's going to pull back hard. And so Bitcoin's back on the run up at 30K, gold's dumping. Let me tell you something right now. Every day somebody out there sells their gold and buys Bitcoin. When's that going to come the trend? You guys understand there's an actual supply cap on Bitcoin? Is there a supply cap on gold? There's certain cryptocurrencies I won't touch with the 10-foot pole because there's no supply cap. Ethereum being one of them. I could care less about that. Could care less. Stacked it a couple years ago, but yeah, got rid of all of it. Got rid of all of it. Don't like anything that doesn't have a supply cap. It's ridiculous, in my opinion. And Bitcoin, another, in my opinion, is like the only sound money out there. Just people have been gaslighted about cryptocurrency. You know, that it's going to get taken down. Crypto won't last. Guys, all the big banks, all the governments have been buying Bitcoin. They're all lying to you. They don't want you to buy Bitcoin. They want to own it all. Because we're moving to a digital currency age. Everybody's like, oh, these central bank digital currencies will ruin Bitcoin. No, it won't. Bitcoin is the honey badger, straight up. It's not going anywhere. It's the most secure blockchain, store of value that's been ever known to man. And now it's a very secure database with the inscriptions, with the ordinal inscriptions. So it's getting wild out there in crypto land. That's why we love Bitcoin. Indeed. But now, back to SPY. I'm not talking about crypto. I'm talking about traditional markets and the pullback. They got ahead of themselves, right? Almost a lot of stocks, right, got way outside the power mean band. Now, why do I always talk about this power mean band? Go back over here. This is the power mean band. You know, a lot of people in traditional TA, you'll see that and you'll be like, oh, look, he's got the super guppy. How cute. Guys, this is not a super guppy. These are all power means that create this band. And then there's 3 log return moving averages, reverse Fisher, and reverse wave trend. That's what comprises this indicator, right? Boom. This is the reverse Fisher. White dotted line is the reverse wave trend. You got the power mean band. My favorite power mean is the 33 length. That is the pink dots that you see right there. And then the 3 different log return moving averages, 9, 33, and 99. Like I've done for years, I use a certain philosophy when it comes to the math, right? Different lengths, time frames. You notice something with all my time frames, right? I follow a philosophy that literally probably the most brilliant scientist ever used. He didn't invent it, he rediscovered it, right? The 369 philosophy. It's very, very, very powerful. It's why I use my my lengths and volatility using square roots, right? Using square roots. Go start playing with square roots, right? Take square roots, break them down into a single number, and tell me what all those square roots end up being. A 3, a 6, or a 9. There's power in the math, right? This entire universe, whatever the hell it is, whatever side of the coin you're on, whatever you believe, math is ruling everything. I mean, I believe we live in a light matrix. That light matrix is literally coded, right? They have found this. It's incredible. It's really incredible when you dive deep into that subject, because quantum mechanics, quantum physics has literally proven the entire universe is running on a freaking code, man. It's running on mathematics. And you know what type of code it's running on? The browser you're using right now is running on a thing called it's self-correcting code. This entire universe is running on the same code. Coincidence? Are we in a simulation? What the hell's going on? That's a subject for another day. It's wild, though, when you dive deep. When you go down that rabbit hole with math and the universe and everything, it opens your eyes big time. This is why I use this. All right. The 369 philosophy is in every time frame I use. Every time frame. I like the 24-hour, right? It's a 6. And this is all, if people understand numerology. A lot of people think it's cringe, it's fringe, it's way out here. It's not. It's all numbers. It's math. It's all math. And so that's why I use these numbers, and they're very powerful. To get down into it, usually I just tell people I use these time frames because you don't. But now you know why I really use it, and it's very powerful. I mean, you'll see that 33 power mean get hit all the time.
Brain dance!
Yeah, big time. So now, SPY. Let's get back to SPY. We keep going off on rants. That's what we do here at Alpha Trading, right? I'm not afraid to bounce around a little bit. And hey, guys, if you're in the Discord, all you got to do is hover over Alpha Voice, click on the open the chat. You can ask any. Well, I see they're already going on here. What time are you on? Yes, boom, boom, boom. Yasha's got that under control. Good, good, good. If you're on TradingView, You can ask any kind of questions you want in the chat. Yes, I know you did. Pretty dope though. I have no idea what's going on. Chat, ask any questions. You want a ticker looked at? I don't care what it is. I don't like to dive too deep down into the depths of the crypto shit coins. But hey, you got a top 20 crypto asset or something you want looked at, anything in the traditional markets, whatever, right? Treasuries, I don't care. Oil. Where's Chris? Is it Chris Alexi Oil? Isn't it Chris? We'll check oil.
Yep.
Yep. Yasha said, yep. So where are we now? Where's SPY down here? What do we got here? I'm pretty sure that is the second resistance level. Yeah, that this red cross line. Last time SPY pulled back to it. Look at these wicks. I've had people come into the chat. Yeah, here we'll get into it. Earth Beer, love the name. Love it. But yeah, I'm getting ready to do a little bit of analysis on SPY to see. So I'm sitting on my hands right now because of where this data set's at. Anyway, this red cross line, that's the second resistance level on the monthly volatility range, right? SPY, right? Last week, running off the chain. Here was the first kind of real pullback. I pulled back to that level and bounced to the local high up here. Where did it go to? 443 area. Now look where we're at. Right back at it. So when you ask, could SPY bounce? Yeah, it could. It did last time hard, but that's where we got to come over here, man. Got to come over here. I'm going to start on the daily. This is what I'm talking about the workflow. So what's going on right now, SPY? Hidden bull. Hidden bull divergence, not only on the returns oscillator, on the Z-score. And this Z-score is optimized for Laplace distribution. And I do realize if you're watching, if you're very new to alpha trading, if you hear me say any of these terms, use that Google engine. Go look it up. What is a Z-score, right? What are the returns? All this kind of stuff. This is what we all had to do. Let me tell you something right now. Because the 6 founders of alpha trading and probably Warlord was here in the beginning. There was a couple other people who are not in the chat right now. Guys, there wasn't anybody to help us. We had to put all this work in. Yep, Chris, gotcha. We had to put the work in. We had to research all this stuff. Because the first thing you're going to do, most people come in, they're just like, hey, what are you talking about? There's nobody, I haven't seen this anywhere. That's because they don't want this information out. Guys, our YouTube channel is shadow banned. I mean, I have never seen something so shadow banned. Why? We're poking this finance bear. He does not like it. They do not want this info out. They don't want people to know how these high frequency trading firm algorithms are running. If that secret gets out, and it is, right? Go out there, go in the YouTube land, go online, see if there's anybody teaching how to do this. They're not. And if you do find them, bring us together, right? Because power in numbers. That's one thing. We're trying to help people. And if people want to come on board, bring them. If there's another camp teaching this, bring them. We can all do this together. There shouldn't be a battle like there is in like traditional TA. Go into a regular TA Discord. It's usually a total shit show. People are arguing, no, well, my strat says this. Well, mine says this. Well, I use the Fibonacci levels. Well, I use the cloud. Oh, I use the MACD. I mean, it's just people are all over the place. Nobody has a real solid strat. And you can't trust those indicators. How many times do you hear people say that? And everybody knows they lag, but nobody knows why. Well, we're telling you why. Because price action follows returns. And look at the daily right now, right back at the top side of the power mean band finally on SPY. Let's blow this up. Boom. Right here. Now, we got a reverse wave trend down here. When you get outside the power mean band, I don't care if it's the bottom side or the top side, you usually come back. Come back and test that reverse wave trend, if not the 33 power mean. And then it rocket shipped again. Well, here we are. Is it going to bounce off the top side of the power mean? This is what the workflow is for. So SPY was trending to the top side, right? SPY was trending to the top side last couple weeks. Soon as it broke back up inside, found some stability inside that second standard deviation band down here, the predictor model flipped to the downside. And what else is going on here? So if this is entropy, the entropy indicator we created here, it's going to tell you when the market's in trend. So when you hear people out there, hey, market's trending, trend, most people have no idea what they're talking about. This is why we brought entropy into the fold, right? Now we know on a daily time frame that this price action is going back into a random walk. It's in a random walk right now. This down move, random walk. This has got everything to do with slope, just like the volatility, just like the correlations, right? The same thing's going on with the entropy. It's all directional. You can be down here, deep trend, but as soon as this turns up, you're heading back into a random walk. I'm not saying this can't flip back down, right? This could actually go back down and go into trend to the downside. But this is just, when I'm looking at a daily or a 4 hour, a 90 minute, a 45, a 33, even a 15-minute chart, I am not trading those charts. I'm getting my bias. It's part of the workflow. I'm down here on the real low time frames, 9 minute, 6 minute, 3 minute, 1 minute, getting my entries, getting really good entries too. You can't get a good entry on a 4 hour. You're either going to be late to the game or you're going to try to front run it and you're going to get wrecked. One thing or another is going to happen, right? Usually you're not going to get great entries. And using traditional TA, if you're down here on these low time frames, there's a reason why most of these so-called TA gurus that are out there, and another news flash, if you really believe these guys are traders, whoa, I got snake oil. I got some snake oil for sale. It'll cure anything. Guys, do we understand that most of these YouTubers, do you know how they make money? Go into the descriptions on any of these YouTube trading channels and look in their descriptions on how many affiliate links they have to exchanges for products. They are feeding on their community. They're extracting money out of their communities to make money, right? By dumping this garbage on people. It's ridiculous. You will not find one affiliate link at Alpha Trading, right? And we are literally, I say it almost every day. Don't come in here and buy our indicators. We have a free chart that you can use to get started on this road, right? That's what we want you to do. We want you to learn the basics of volatility trading first, and to see if it's something you want to do, because it's going to put in, you're going to have to put some effort into this. It's a whole new deal. You literally got to put the trades down. Stop trading, start to make the transition. If you have to trade, paper trade, right? Using the new indicators. Because here's the problem. If you don't shit can the old stuff when you're starting to make that transition, as soon as you see a move happening and you don't understand what you're looking at on all this new information, you're probably going to revert right back to your old ways. And usually your old ways are what brought you here in the first place, because you want something better. That's what every freaking trader that ever came over here, that's what they're doing. They want something better. And if it's not for you, it's all good, man. If you just want something to listen to, usually we got a lot of comedy going on. and we talk about a lot of different subjects. Nothing's off here, right? And we can talk about anything. We really don't care. Let's see, about 10 Eastern. Yeah, we'll see. We will see. Let me see here. So that's a daily. Where's this 4 hour? Let's see if this 4 hours ripped down, how close it is to this reverse wave trend.
Say hello to my little friend.
Got Tony Montana in the chat. Love it. Oh, power mean band. And this the code for our UPM, I think it's only about 1,400 lines of code or something.
Yeah.
So it takes a little while to populate.
2 hours later.
Now, usually when I'm not streaming on the platform, I'm literally using the indicators on, it's a little quicker. It is a little quicker. There we go. So where are we on the 4 hour? I've been waiting for it. Yes, yesterday, we were tapping that reverse wave trend. And this is what I talk about. Now we opened up the new day below. But look, you're in no man's land. Here, one or two things are going to happen, right? What else is down here? You got the reverse Fisher. You got it at about 428. It's only about 6 points on the 4 hour. It's not bad. Is this daily candle? I know this is a 90-minute chart, but I'm saying, is the daily candle going to close back up above the reverse wave trend right here on the 4 hour. Going to be interesting, man. It's going to be real interesting to see what happens there. What is it, 434.51? I mean, we're only a couple tenths of a point away. If it rejects here, we could see some downside action, all right? And this is what I'm saying. You can take the news, wrap it up in a little ball, and shove it. We don't give a shit about the news or anybody that's talking. The Fed, it doesn't matter. When you have leading information, this leading information will tell you the news. This is what people don't understand, and this is why the high-frequency trading firm algorithms always have a leg up on people. They already know the news. They don't need somebody to come out and speak. The VEPS are literally telling you what's getting ready to happen. Now, am I literally going to come out here? One thing we don't do is give signals. We're teaching people how to volatility trade so you can become your own signal. That's what we do here. Now, if you're good and you can read between the lines as I'm going through all these charts, you'll figure out my bias. You'll figure out what I'm thinking, right? And right now, crypto's bullish, obviously. Traditional markets got way ahead of themselves, running outside the power mean bands. 4 hours already came back, right? 4 hours already came back. Daily is, so the 4 hours at the reverse wave trend. Daily's at the top side of the power mean band. You go up higher, let's go to 2-day. This is what I'm talking about, right? This is what I'm talking about. Way outside the power mean band. 3-day, it's going to be way outside, right? 5-day, which is a weekly. I'm going to getting ready to go back to that 3-day real quick. Let me see something. In last week, I literally said on stream, you can go back and watch it. When SPY ripped through this reverse fissure, I was like, hey, traditional bulls, you better reel yourself in because this is a cap on the 5-day. I almost more or less put a guarantee that that weekly candle was going to pull back inside and close inside that reverse fissure. Did it? Yeah, it did. The way we've got this system set up, it's so freaking powerful. This is why alpha traders don't buy tops and sell bottoms. We don't do that. Number one, we're trading low time frame volatility. So when you start doing that, you don't care about the data sets anymore, right? Now, if you're an investor, if you're buying stocks, you're stacking sats on Bitcoin for the future, none of this matters anyway if you're just investing, right? If you're trading low time frame volatility, though, turn the data set off. That's one thing in traditional TA you cannot do. This we talked about this yesterday. Most people will go, they're going to look at their data sets. Then they're going to go to the charts. Okay, well, here's where the data set is. Now, I'm going to go to the charts, my traditional TA lagging indicators, and try to figure out where this data set's going to go next. I don't care what time frame, it doesn't matter. Where when you trade the VEPS, you can turn the data set off. The information, the proof's in the pudding, right? We look at the indicators first. The indicators are going to tell us where the data set's going to go. That's just how it is. Why? Because the indicators are built on returns. Right? Price action follows returns. It's really simple, but it's stuff that you've never probably heard before, which is fine, which is really fine. But now we're getting this pullback. So 5-day, ripped up through the reverse fissure, pulled back, closed inside. If that rejects on the 4 hour, we could see some pain coming for these traditional markets. I'm not kidding. Because on a 5-day, 406 is where the reverse wave trend is. The top of the power mean band's at 416. So we got some nice pullbacks. This thing can drop just as fast as it popped. But when I saw it hitting the fissure on the 5-day, I was like, game over. All right, game over. Now, 2-day, let me see. Wave trend was crossing up fissure. How long ago did it do it? Yeah, way back here. Why did this pull back right here? Not only was it outside the power mean band, look at the wick right to the reverse wave trend. But when the wave trend's crossing up fissure, that is a magnet. Guys, this isn't a death cross or a golden cross. That stuff is so silly. I'm not bashing anybody for using this because you get in the echo chamber. Everybody on YouTube, all these people are saying, look, this is the way you should trade. So everybody just gets in the groove. Hey guys, I guess this is the way you should trade. We go against the grain, and we're going to attract the smart people. They're going to see this stuff and be like, look, I don't know exactly what it is, but there's something to this. Yeah, of course there is. Now look at the 3-day. I've been waiting. Let me see. Is this crossed up yet? Look how close it's getting. I was talking about this. We could get some pain here. What's that? 412 Fisher wave trend at 408. It's going to cross here probably in another, I'd say another 3 candles, or at least it's going to be real close. So on this 3-day, top side of the power mean band about 420. That's only about 14 points. 408 for the reverse wave trend. Look out. Look out. That's what I'm telling you right now. This thing, and look, you're in no man's land up here on these macro time frames. This is not sustainable. Not sustainable at all. I wouldn't long this to, I mean, my bias right now, obviously, I didn't run a whole workflow on SPY, but my bias is the downside. Could it pop here? Yeah, it could, because you're at the 4 hour. But I'm playing it safe, right? I'm playing it safe. Let me see here. Now, when I do trade,
it's going to go up, down, or sideways.
When I do trade traditional markets, I'm trading these zero DTE options, right? Most of the time on SPY, sometimes IWM, Russell, things of that nature. Let me see here. So the expected move on SPY today, top side 436. It's about a half point below the first standard deviation. Expected move to the downside about 433 and a half. About 2 points above first standard deviation to the downside. So 436. Go back over here. There we go. Yep, popping down. Is the same thing going to happen? All right, found support down here. Then this is a resistance level on the monthly volatility range. Where I'll show you where it's at. Let's move it up slow. Doesn't like those knives. This thing doesn't want to budge. There it goes. Let me scale it down so I can show you where this monthly range is. Come on. Trading views lagging like TA indicators. There it is. So here's the monthly range down here. Top side about 415. So you had the first resistance level, second resistance level. Once you get data set above there, it becomes some strong support. Where is the top? Here's the top of the monthly. I even said this. Going into last week. I was like, look, the data set's at the top of the monthly range. Game over. On the daily, right? Or on that 5-day, it shot through the reverse Fisher. The data set on the VRE is at the top of the monthly range. That is a cap. And I've even been talking about this. SPY saw its high for the month. Very low probability this month SPY closes above 444. Just because of these volatility ranges. You get outside there, you're going to come back and pull inside it. Just like last week. See this red dotted line right here? That was the top side of last week's volatility range. So what does it do? It runs through it right here, goes up to the cap of the monthly range, and I was literally telling everybody how much of a high probability is by the end of this week, SPY is going to pull back and close right at the top of the weekly range. Got to wick right to it on the last 15-minute candle. Do you not think the algos know about this stuff? The algos trade this, and I'm not talking about these little algos people are building. I'm talking about the high-frequency trading firm algos that literally probably cost 7 figures to build these things. The math that goes into that is incredible. Meanwhile, you got YouTube Jimmy telling you that the algos are running on the fibs or something. Guys, it's ridiculous, man. It really is. And let me tell you why a lot of these people, they'll say, oh yeah, this is what because they're selling indicators probably. Right? And they're going to say, oh, this is what the algos are running on. They've got people thinking that the algos are trading exponential moving averages. Those things lag so bad, it's ridiculous, guys. That's why we use what? Log return moving averages. They're moving averages built on the log returns. Do they hit? Are they real support and resistance? Yeah. It's real-time information. Real-time info. And that is what you need, right? That's what you need. Real-time information, not lagging information. Yeah, Tony Montana. Okay, let me scale this back up real quick. Here we go. So here's a nice tight daily range. It was yesterday. Was there some trending going on? Yeah. Top side first, rejected off of that bottom side of the weekly range, top side of the daily, and then pulled back. Not a big trend, but for SPY, yeah, man. Yeah, it's not nice little moves. Got people in all kinds of bad positions. If you made money yesterday trading SPY, good on you. Good on you. So the bounce right now, what's going to happen? Is it going to reject off this daily?
You win.
I mean, I'll be the first to say this thing's got some room to run. Really does. Got some room to run. But when we're talking about top of the monthly up here, like I said, very low probability it closes below 444. 444. Meanwhile, gold is just getting hammered. Let's check gold out real quick. Goodness. And keeps coming down to like this 1920 area. I'm telling you, it's not going to be the bottom. You want me to show you why? Here's what I've been talking about the whole time. Let me flip the gold. I'm on 4 hour. No. 5 day. And if you're looking at any traditional assets, and when I say that, I mean, they're right. They're not trading on the weekends. Not trading on the weekends. Obviously, gold opens up the futures on Sunday night, but yeah, all good. Here's a cross on gold on the 5 day. Where's this at? It's right around that 1890 mark. And it's looking like the wave trend wants to roll over. But gold, look at the previous time it got outside the power mean band, got up above the reverse fissure. Where'd it pull back to? Possibly a wick right to the reverse wave trend. I hope people that are watching this really are watching. Okay? This is why we do these streams, to get you to realize the strat that we've put together here. This is real, leading information. This is what you need. So now, outside the power mean band again. Here we go. Is it coming back down? Is it going to test this cross? I'm telling you, man, gold's going to pull inside 1900. Now, am I looking for a nice bounce here? Do I think gold's going lower than that? I mean, we're up on a 5 day. This is a weekly, in my opinion. This is a weekly chart. I could see a bounce here. Meanwhile, you think people thought this was support, right? Oh, hey, hold on. I'm gonna put a horizontal on here. That's gonna be that's solid support. I'm gonna use data sets for support and resistance. Guys, you've been misled, man. Data set tops and bottoms, candle closes. That's not real support and resistance. These markets are random most of the time, right? And our entropy indicator is going to let you know when it's in trend, right? Trend is bright blue, right? And once you go into a trend, you're going right back into a random walk. This is what the markets do. This is what people don't understand. These markets are coming in and out of trend into a random walk all the time. How do you think these data sets are getting pushed into a trend? The algos, right? The algos. All right, let's go. So this is where I'm looking at on gold. Now you can go down here to 3 day. Let's see where gold's pulled back to. You're right at it right now. All right. Now I talked about this before, and you're at the bottom of the power mean band. So to break down, here's right about where it is on the 5 day. Down about 1885, 1886 area. But the 3 day, bam. Now 2 day, probably going to be below. See what's going on. And everybody thinks like data set tops are support or resistance. Guys, it's not how it works, man. Here we go. This would be perfect. 2 day, 99 log MA. Is it real support? Didn't close a candle below it. This is real-time leading information. Price action follows returns. We say it again and again and again. You get the bounce off the 99 log MA to the new local high up here, right? 2070 or 2080? Good for gold. Pull back immediately, right back down to where? Look at the wicks right into the reverse wave trend. Bum, 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 bum. Now we're below it, which leads me to believe that 5 day reverse wave trend, reverse Fisher cross, probably going to get tapped. And if it does, you're going to see the data set on the 2 day bounce right off the 99 log MA. See the daily. Hell, daily might be there. So here you go. First, you're outside the power mean band up here. All right, it found support on the 33 power mean, bounce, boom, right back down the reverse wave trend. Then it started rejecting off the reverse wave trend, went right down to where the reverse Fisher was crossing up the 99 log MA, found support here for a while. Now it's in no man's land, right? On a daily, yeah. So now what am I looking for? I'm telling you, and when this rest of this move happens, guys, it'll probably be a wick, and it is going to get sucked up real fast. Why? Because look at the daily. There's nothing down here. Here's where it is, right about, where's 18? Right about here is where that 5-day is. So maybe we get a quick wick down. But then look at the daily reverse Fisher, 1962. Just throwing that out there. Just throwing that out there a little bit. Look for a quick move down there, under 1900, somewhere in that area. But like I said before, this is where the workflow comes in. Because I already showed there on the 2-day, right? Boom, it's already tapped it. I mean, this thing, it could bounce out of here. But when you got the dollar the dollar's just wrecked. Let's be real about Dixie. Dixie's a shit show. But look at the intraday volatility still. Look at the VIX. VIX is 13.7. Literally no fear. No fear. This thing could dump even more. But it's surprising, right? We're getting this pullback in SPY while VIX is dropping. Intraday, though, up. All right, intraday is up. This thing could pop. Let's see here. Yeah, that's gold in a nutshell. Let's take a peek real quick while I'm thinking about it, because I just saw that message again. Oil. What is it? Oh, Jesus. Okie dokie. Let's see where this is at. All right, let me pull oil up here. There we go. We're on daily? Nah, 5-day. Good Lord. It's nice for the pumps. Let me see. What did I pay yesterday? Like $3.40? And this is what they wanted to do. They want us to think $3.40 gallon of gas is good. When they run it up to 5 and then it pulls back to $3.40, you're like, oh, this is great. That's what they do to us. Okay. I mean, on the month, yeah, I mean, yeah, oil's about found its low again. I mean, this thing's probably going to pump. When you get below the power mean band, right, returns mean revert. And I don't care what data set it is. You're outside the power mean band. Look at the wicks you send through the reverse wave trend. Did you close a candle below it? No. Look at this time, 33 power mean. But you got to remember, I'm not trading. This is all just part of a workflow. And usually my workflow, because I trade 0 DT options or whatever, I mean, I'm starting on a daily. But these are the 5-day, 3-day, 2-day. Gives you good targets. Where's the reverse wave trend? Where's the power mean band? All that good stuff. God, let's see how far below this is on a 3-day. Thing is, all these power mean bands are flipping bearish, which is never good. Did at the top. Yeah. Yeah, at some point, this thing will bounce you. You will get stabilized up above that reverse wave trend once you test it. And then the power mean band will flip back around. Is that time happening now? No, I don't think so. It's close, though. It's real close. It's just been riding it down, man. Riding it down. Got a little pump here. Wasn't having it. Why? What is this? The 99 log MA. And it is powerful, man. They tried to sustain above it. Wasn't happening. And it really dumped out. Local low, at least wick-wise, 63. About 63 3/4. Interesting. See the daily. Is this what I want to do? Where has it reacquired this reverse? You can see, man, even on, what are we, daily? Rejecting off of the reverse wave trend. Let's pop down on a 4-hour. Oof. Oh, nice. Got the ducks in the house. Got a fun soundboard too. Hey, another kudos. You want to come into the Alpha Trading Discord? You can use the soundboard. can ask questions live on stream.
Wow.
You can ask live on stream. Okay, well, we got the Fisher support and price action down here on the daily. Or on the 4 hour, my bad. This is what happens, though. And look. Wow. You usually don't see just a run through that reverse wave trend. I mean, look at that 4 hour candle, man. That thing dumped right back out. Dumped out right to the reverse. The low here is real close on crude, especially for the week. I wouldn't be a bit surprised to see crude rip up, to be honest. Let me see here. What's the volatility doing? Yeah, man. Yeah, we're getting some, a little expansion. It's a battle. That's why we're seeing this wick down here. Because you got the 981, 2400 contracting negatively correlated. You got the low length expanding negatively correlated. All right. So as much as that low length wants to push the price action down, the higher 2 lengths of volatility are sucking it right back up. I can use literally, and when you learn all the correlation, the volatility, the tendencies that go along with all this, you can turn the data set off, look at the volatility and be like, yeah, this is probably a real nice doji. Flip over, it's a doji. Or you can literally tell, I bet this has got a big bull wick. I bet this has got a big bear wick. When you learn, it's something we can't teach. It takes time looking at these charts over and over and over and over again. If you guys knew how much time some of us here have spent, how much chart time we have with all this, it'd blow your mind. It'd blow your mind. I mean, holy crap. Tens of thousands of hours over the last, 5 years? See, probably even more than that. I mean, I'm on these things every freaking day, even on the weekends, right? Just always looking for something new, right? Beta testing new indicators, doing all kinds of fun stuff for the community. You can see this thing pulling up right now on the 4 hour. You see the 90 minute. I'm looking to see what time frame is back down at reverse wave trend bouncing. Come on, 90-minute chart. Powerful. 90-minute, 45-minute charts going as in a workflow. Very powerful. Very powerful indeed. They're both 9s. If you don't understand that, any number you see, triple digit, whatever, you add all the numbers together until you finally break it down into a single number. All right, so down here, yeah, got another wick below reverse Fisher. It's pulling up right to it. Probably going to close that 90-minute above it. The reverse Fisher, whether it's on the bottom or the top, right? Real support and resistance. It's the reverse Fisher. And what is the Fisher transform? It's in the name. What does Fisher do? Transforms price action into, it lets it finish out in a normal distribution. That's what we're looking for. That's why we play around with the Fisher. Reverse wave trend, powerful as a reverse wave trend. Do I use it regularly? No, I don't. I don't just use wave trend. That's why they built the reverse wave trend. It's a different animal. It's a different animal indeed. Jesus. My Telegram is just out of control. And I don't like that to happen, right? Because I got behind on emails. Who else is in that camp that's got like 5,000 emails and shit? I get so many every day. Finally, you just miss a couple days and you're like, oh, what do I got, 150? Oh, it'll be okay. Then a week later, you got 1,000 and Jesus. It's such a nightmare. I got so many damn emails. I got to catch up at some point. Okay, let's see here. 45. Man, these things are dumping way outside these power mean bands. When's oil going to find the bottom? I mean, look at the trend. Look at our predictor. Newsflash, you can trade our prediction model. You want to get real lazy? Just trade the predictor. As soon as the predictor on the candle close, as soon as that predictor flips the other direction, just get out of the trade. I don't usually say that. I'm telling you, we put together a system right here that's pretty powerful, man. And here's what I highly recommend. If you're not a low time frame volatility trader, right, there's other ways to use this. And I just mentioned one of them. You'd be surprised. You go up here on a macro time frame and you trade the prediction model. It's fail safe, man. It's almost a fail safe. But what are the 3 things that you have to adopt? And this is all part of risk management. Okay, first off, number 1. Here, I'm going to give you a short course in trading psychology. There's only one thing. I just published a book. It's 450 pages. And you know what it says on every page? There's only one sentence, and it's just repeated continually. Do not be emotionally attached to your trades. It's a bestseller, New York Times bestseller list right now. Now, obviously, I'm being a little funny, but that's what my book would say. So anybody out there, they're selling you trading psychology courses. Guys, if you're falling for that crap, please, God, don't do it, man. It is a total scam, guys. Humans have emotions. We're supposed to show them. Now, I've learned over the years not to let my pendulum swing too far in one direction, because I guarantee you let that pendulum swing really far to this happy side, the swing back is going to be devastating. Just you gotta stay inside yourself, right? You gotta stay inside yourself. So don't be emotionally attached to your trade. That's the first one. So if you're not emotionally attached to your trade, it's going to allow you to, number one, get out immediately out of bad positions and take your profit. I'm not talking about just sitting and waiting to take profit. That's what this chart's for, right? That's what this chart is for, literally. Profit taking, distribution levels, volatility ranges. If anybody out there does have the free trial and you have this indicator, load it up. Go back. It's not like your back test. Look, you don't have to back test leading information. Do you ever wonder why in traditional TA they always tell you, oh, just back test this? They're telling you to back test it to see how much it's just going to bang you right in the butt. You got to see the tendencies of this lagging indicator so you don't get wrecked. That's what back testing is all about. Look, you don't back test leading information, but you can go back and see these levels, the distribution, right? Look at crude right here on that day. It went right down to first standard deviation, normal distribution, got a one wick through it, didn't close a candle below it, boop, right back up. You'll see this all the time with these distribution levels. What the hell is that down there? Is that the center of the weekly? Yeah. So that's what oil just did, right? On the new weekly volatility range. That's it right there. Center of the weekly. There was the top of the weekly. Had a little bounce from it. Rejected off the daily. So this green line, first support level for this daily volatility range. Went through it real quick, right? Boom, 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 boom. Got down. This is the top side of the weekly. Bounced from there. Rejected off of that support. Flips resistance. Then it drops right to the center of the weekly range. This could be a bounce out of here now, right? As I say, we get a nice little 15-minute candle cooking. Good stuff. Let me go back over on SPY, though. But those are the three things. Don't be emotionally attached to your trade. Take your profits. Limit your losses. And I'll tell you right now, how do I do that? Say I get an entry on 3-minute time frame. That's what I'm seeing. I did my workflow 9, 6, 3, 1-minute charts. I'm seeing a great entry on a 3-minute. Boom. If that data set closes one 3-minute candle below my entry, this is why I trade low time frames. Are you going to sit there and be like, hey, if this 4-hour candle closes below my entry, I'll get out of the trade? Hello? Have you seen some of these 4-hour candles? You're wrecked. If one 3-minute candle closes below my entry, I get out of the position. First, I'm going to try to limit out. I'm always trying to limit. Limit in, limit out. Market orders are for simps, man. I'm going to go out and say it right now. They count on you guys, right? You're the dumb money. That's what they call you. Do you know that? I'm not calling you that. That's why we're here. We're like a rehab facility for traditional TA traders. But the big firms call you dumb money. That pisses me off a little bit. That really grinds my gears. It's like, I'm not dumb money. I'm winning trades. But anyway, you adopt that into your edge, dude. You're unstoppable. Think about it. You could throw darts at a dartboard if you adopt that. Red, I'm going short. Black, I'm going long. Monitor a trade. Oh, it turned against me. I'm out. You got a 50-50 shot every time. Now, I'm being funny, but at the same time, that's what that does for you. It's the hardest thing for people to do is to get out of the bad trade because of their ego. No, I know that was a good entry. YouTube Jimmy said it was going to bounce on the 50 EMA. This is a great entry on the 4 hour. Then you're wrecked because YouTube Jimmy's not a trader. And YouTube Jimmy's probably running 2 accounts.
The silver pocket into a golden pocket.
Yeah.
Uh,
Yeah. And when they're talking about like fib golden pockets, we're talking about mean reversion.
Get wrecked.
Yeah, good way to get wrecked. Good way to get wrecked. How subjective is Fibonacci? Who's starting the Fibonacci retracement? I see people, they'll be in Discords and they're doing these fib retracements. It's like, who even are you? Why did you run a bear retracement on that? People don't even know how to use the freaking tool most of the times. But they're just squawk, squawk. This is the best thing since sliced bread. No, it's really not. Do I like Fibonacci? Yeah, in the creation process. And it all goes right along with the 369 philosophy. It's how things are created, if you understand about the flower of life and everything like that. But when it comes to trading, but people are like, well, look, it hit this level and it hit that level and hit this level. Yeah, like I said, it's very subjective. You can start that retracement anywhere. And I've seen people do the wildest things with the Fibonacci tool that make 0 sense. Everybody in, especially the founders in here, guys, we were deep into traditional TA. I know traditional TA better than most people that use it. So it's not like I'm just talking out of my ass. I used all those tools for a long time. Then I finally realized, I was like, I'm not making any money. I'm not making any money. You know, and then you're listening to the wrong people saying, yeah, leverage is okay. It's okay in the right hands and the right asset, right? Like commodities, Forex. It's really for Forex. Have you seen Forex pairs moves lately? Be careful, man. There's volatility in everything. Crypto Warlord's favorite tune is what is it? What you gonna what's what you gonna do? The old Quatcha.
Yeah.
That is
Bang.
that is the Warlord's native currency. Good stuff.
So for me, if you were to look at that dump, it was actually like an extra. If it's 17 on the charts, it was like 15 on the street at the forex.
Right.
So if you had $100, you would have got 1,900 units. Then you would have got 1,500 units.
There it is.
That's like a grocery bag and a half difference. Good to say.
Oof.
So as Bitcoin pumps, let's say you have Quatcha, you can now buy more dollars for cheap. And if the Quatcha dump, whatever it did, it looked like 15%. Or you could buy on the street for 15, so you get like 20%. And BTC is now also pumped 20%. Well, then you're in the same spot. You can buy the same value of stack.
Look at this way.
So that's what sort of happens. And then it gets haywire when they don't do that, or when you get it all wrong.
Right. You know.
Yeah. So then, yeah, you can lose money drastically, but in the same term,
Just sell your message.
you can mint it, you know. So,
Yeah.
add zeros to that. It's like literally take $1 million, you convert it into Quatcha, you get 19 million units.
Right.
Then you buy back in, and you're up like 120 grand in 4 hours.
Right.
Right. So like those are the plays with the big money. So you got to be ready.
So when I pulled up everybody's favorite pair, right? Who doesn't like pound yen? I mean, it's a pound yen. Everybody loves to trade pound yen. Guys, look at this wick on this 15-minute candle. First standard deviation clear out, both sides. One ST to the top side, one ST to the downside. How smart do you think it is to use a leverage there? People got smoked right here. Guarantee it. People got smoked on that 15-minute candle. Both sides. Maybe a clear out. Maybe this thing's getting ready to rip. Maybe pounds getting ready to slap yen around a little bit. We'll see. But yeah, this is what I'm talking about, man. It's like Volatility's everywhere. These big algos are in everything. Would you think this just happened? I mean, dude, this was calculated move right here, man. I mean, you literally open this up, run this thing to the 1SD, same 15-minute candle, rip it right back down. Bottom of the daily range, 1SD to the downside. This is great support right here, by the way. First standard deviation to the downside. You got the bottom of the daily range. You notice something with these candles? You see wicks through it to the 1SD? Did you close a candle below the daily range? No. These are volatility ranges, man. Very powerful. Very, very powerful. Yesterday, I mean, look at this rejection right here on this 4 hour. That's the literally first standard deviation to the top side, pulls back. Where's it go to? First standard deviation to the downside on the daily. The white and blue cross lines are daily volatility or daily distribution levels. White being Laplace distribution, blue being normal distribution. Got a wick right to the 1SD to the downside. Where did it reject from? Top side of the 68.3 Laplace. And that 4 hour 1SD to the top side. Pulls back to where? Back into the daily range. Doesn't close a candle below it. I mean, this is like one of my favorite charts. I could trade this thing all day long, but I like to get perfect entries. And that's another thing. When I'm over here on the 3 minute, 1 minute looking for entries, those entries are going to line up with these areas, man. This is why I get great entries. I take all the information from this chart, and when I get it, when I see it, I immediately run over here. Where's it at on the VRE? Oh yeah, perfect entry. All right, it's either rejecting from a distribution level or a volatility range, or it's popping off one. Just the way it is. And look at this. This is exactly what I talk about. I wouldn't be a bit surprised they run this thing right up. You clear them out, right? You get people confused as shit, and then you run it back up. I mean, that happens all the time in trading. But yeah, I just saw that Earth beer in there. Yeah, man, it works great. It doesn't matter what you're trading. You can be trading Pokemon cards in the backyard. Teach your kids the VEPS, man. They're going to school the neighborhood children. It's a riot. It works great on any asset. Any asset you pull up. Any Forex pair. Commodities. Stocks. Cryptos. Why did we adopt Laplace distribution? Because it's fairly new. We got a newsflash. Even the high frequency trading firms only been using it for maybe tops 3 years, 2 years. Because you go back before that, Laplace, you can just tell Laplace distribution ranges weren't getting hit intraday. It was the normal distribution levels. Now, both of them. That's why we have both up. So the skinny lines, like I said, so daily are the cross lines. The skinny white and blue lines are every 4 hour candle, Laplace and normal distribution levels. And like I said, this takes a lot of work to learn this stuff. But I'm telling you, you come into the Discord, there's so much information in there. Always somebody to answer your questions. And that's what we put the challenge out to people. Please, if you're watching these streams, ask questions. You can come into Discord and speak freely, man. Even if it's just a debate, right? You're trying to say, okay, I've used this. I hear what you're saying. Tell me more, because this is what I think about this indicator, and this is what I see. And then we'll break it down for you. And it'll be like, well, now look at our similar oscillator, and I'll show you why. And the bottom line is the standard deviation of returns is volatility, right? That's the bottom line. It's all about volatility. Volatility creates the candles. A lot of times people are like, because if I just use the abbreviation VOL, people immediately, unless I'm in our Discord, think I'm talking about volume. What do you think creates the volume? Volatility. But people are literally trying to create strats to use volume to trade. It's not how it works. Everybody's learned the hard way, right? Once you get this information, what's it all about? Information, size, and speed. We've got it nailed down, right? We've got it nailed down. We got the information. Size is all going to be part of your risk management strategy. Speed, right? Speed. If you're trading low time frame volatility, hopefully when you turn on your internet, it's not going bing, bong, boom, bing, dong, dong, dialing up. Hopefully you got some good fiber running. You need goods. You need everything acting right. Unfortunately, this is why we talk about the traditional TA indicators all the time. And like I said, if you have a strategy in traditional TA, you have a good P&L, you're here for the fun, right? We just like to have a good time. We're not trying to change anybody's mind. We're just trying to show you how these high frequency trading firms are programming their algorithms. That's all we're doing. But if you have a profitable strategy now, kudos to you. Kudos to you. Towards the end of my traditional TA trading career, I had one hell of a strat put together, right? But it was still lagging information. But I found a way to take all that lagging information by using my number philosophy to be able to win a lot of trades. People way back then, this was probably 6 years ago now, probably remember that strat. It was such a good strat, somebody in that Discord stole it, put bells and whistles on it, and started selling it. That was one of my, that was like my exit from there after I called him a total scammer. But yeah, good luck. Hopefully you sold a lot of it, because if you're trading traditional TA, it was the bee's knees, man. It was the best. I mean, I worked hard to put that thing together. And at that time, the only type of anything volatility I had to work with was Bollinger Bands. Guys, those are, John's a good guy too. He just, I mean, dude, this is, he's like done with all of it. He doesn't want to make any changes, but there's a better way. You know, the Bollinger Bands, still traditional TA, man, but it gave great areas, right? It helped me with the strat I put together. And what were my two crosses? The 21 and the 33, right? So if you, like I said, if you got a strat put together, good on you. Good on you. Nothing to see here. I'm on 15. Pop this back on the 15 minute. And you can run the VRE on any time frame you want. When I'm actively trading low time frames, I'll throw it down on the 3 or 1 minute, all right? Because it tells you a lot more than one 15-minute candle. You're going to see on the 1 minute, right? The 1 minute candles were closing up here. This is why, you know, you're at the 1 SD. High probability thing rejects from there. Then it bounces from the 1 SD on the daily. That's a powerful strat. We love it. Let me see. What's BTC doing? Hanging around 30? 30.1. Pop back over in SPY. Boy, I talk talky. Good. SPY's just chilling. Rejecting off the top side of the daily, maybe? I don't know, man. I don't know. Let me see here. Stretch this out a little bit. Come on. The mini's at. There's gold. Well, it's getting close. Get your ass down there. Like I'm telling you, it's going to be quick. It's going to be quick because these wicks down there in the below 1900, there's just nothing down there, man. Nothing down there. And you're going to see those returns mean revert, and I'm telling you, they're going to mean revert fast. So be prepared. But the fact that we've been talking about this for 6 weeks and it's been slowly declining ever since then to our target. The first time I talked about that, gold was at about $2,020. And I started giving a few targets for gold. And there were some people like, there's no way. Gold's really stable up here around 2K. I'm like, all right, good luck with that. Good luck with that. Because this thing's going to pull inside 1900. Very high probability it's going to happen. Because returns mean revert. And price action follows returns. Okay, let's see here. Let's see what Dixie's doing. Yep. Shark Tank, baby. Huh? Dixie's trying to find some legs here. Dixie's trying to find some legs. And where's it where'd it bounce from down here? This is a monthly support level. Is it the first? Let me scale this down. Where's that monthly level? It's up here higher. I think that's the bottom right there. Yep. So here's the bottom of the monthly range, that red cross line. Here's the center. That green cross line right there is the first support level monthly volatility range. Found support on it. Sent it 1, 2, 3, 4, 5 wicks right into it. Count that as 6. Had a quick rejection, 68.3 Laplace to the top side. Now it's moving. Probably heading to first standard deviation top side. You got the bottom of the weekly range right here. That's just been, I mean, look at the wicks into the center of the weekly. Bump, bump. Bump, 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 rejection. Having trouble with it, man. Having trouble with the weekly range. And that is, let me see here. Let's get this whole weekend. There we go. So here's the bottom, center of the weekly. Look, it hasn't been able to penetrate. You got a couple candle closes up above it, immediately drop back down. And you got a tight daily range on this day right here, right? Telling you, hey, there's going to be a trend. Probably right here through the day, you're like, trend? This thing's just ranging right around inside the 68.3 Laplace until,
like showing shoes.
There's the trend. Right to the downside. Closed right at the second support level, daily volatility range. There was the tight daily, first support, second support. Came back in, closed right at it. Didn't quite make it down to the 95.4 Laplace distribution range. That's one of my favorites. That white cross line, 95.4% Laplace distribution range. Now, when we're talking about these distribution ranges and their probabilities, so it's not a 95.4% chance the data set goes to that area. It's a 95.4% chance the data set doesn't close below that area at the end of the day. First standard deviation right here. There was a 68.3% chance it wouldn't close below here. That leaves a pretty high probability, though, that it could, and it did. But then you got 95.4 Laplace here. When you start getting up into the 95.4% probability ranges, like right here, second standard deviation normal distribution. See, there's no standard deviations with Laplace distributions, just plain probability percentage levels. But the 95.4 Laplace, the second standard deviation is also a 95.4% probability area, right? So there was a 95.4% chance it wouldn't close below the second standard deviation and the 95.4 Laplace right here. And they're always really close together. When it comes to the 68.3 Laplace, it's a lot tighter than the first standard deviation at 68.3% probability level. And if you Google and you look at Laplace distribution, just what it looks like, Laplace distribution looks like the freaking Eiffel Tower, man. Where normal distribution, if you remember from school, it's the bell curve and normal distribution, right? You got your bell curve, then you got your tails. That's how it works. That's why we built the variance indicator. What is variance? I'm sure right now somebody with a big brain is Googling variance. Variance is the spread of data from the mean. The mean of what? The mean of log returns. Because price doesn't have a mean. Returns have means, not price. This is where people get screwed up. I got screwed up on it in the beginning. It's very confusing in the beginning because we're coming from here and we're jumping the fence over into here. And I'm telling you right now, you know the old saying, the grass isn't always greener on the other side. The grass on this side is as green as this 2400 volatility read. It's very green on this side. It's just giving yourself the opportunity to learn this. That's all it is. Put the trades down for a while. Start learning. If anything, start paper trading. Maybe small contracts, because it's always good to have a little bit of skin in the game, right? It gets the emotions going, which, like I said before, is fine. As long as you're not emotionally attached to the trade, you're fine. And when you get out of a losing position, like I was talking about before on the 3-minute, say that the correlation breaks on the volatility move, the turn in that move turns against me. Had a great entry, right? But these idiots that use a ton of leverage just screwed it up for me because the algos recognized something. The correlation broke. They're going to run the price the other way and knock a bunch of people out of their positions. So I get out of that trade immediately. I'm not going to get underwater. I might lose just a tiny bit of cash. You get a bigger endorphin rush from saving yourself money than you ever will winning a trade. That's when you know you got it. When you crack a smile on your face when you're exiting a trade, right? Because you don't want to get underwater, and you understand this is how I build my P&L, by limiting my losses, not sitting in underwater trades hoping, oh, I got a great entry. YouTube Jimmy told me this was a great entry. I'm in his what the hell are this called? I'm in his Patreon, in his Signals channel. Let me tell you something about YouTube Jimmy. YouTube Jimmy has 2 accounts. One he longs, one he shorts. And when he enters a position, He's entering both sides. That way, whatever side that move goes, he can pull up that account and say, told you, look, I'm right. And then you know what he does at the end of the year? He'll take the account that lost the most money and write it off on his taxes. Guys, it's such a massive scam, and most people fall for it. This guy is a great trader. Holy shit, he's right all the time. Yeah, man, it's easy to be right all the time when you're trading both directions. When you enter a trade and you long and short right at the same spot, of course you're going to win. Somewhere, you're going to win the trade. These guys have got it down to a pat. They make a lot of money. If you guys knew how much money these crypto YouTubers made, why do you think they got links to all these leveraged exchanges? Do you know how much these exchanges are paying these guys? Guys, like Bitcoins a day. Especially the big YouTubers. The biggest. Not going to mention any names. We're friendly. I'm sure he'd like to smack me sometimes, which is okay. He knows I'm right. You know why I know he's right? Or do you know why I know he knows I'm right? Because he talks about volatility in his streams. They build a volatility indicator, but at the same time selling crap to his customers. Pushing traditional TA. This is the way to do it. I've told him before, why don't you just make a slow transition? Why don't we attack all the retail traders together? We literally tried to set up a deal with this guy, right? But he started thinking, these guys are going to ruin the way I make money. Because I make money because people buy my indicator packages, because people click on my YouTube channels, right? They give me likes. They're using my affiliate links. It's unfortunate. It's unfortunate indeed. But we'll be there one day. People are taking notice about this, right?
Yeah, boy.
The ones out there that really want to become professional traders are going to listen to our streams, watch, and they're just like somebody said in the chat earlier. This is pretty interesting. Yeah, man, it's very interesting. I'm telling you, if you give this a little time, come in, get the free volatility starter pack. It's all you got to do. Come into the Discord and request it. You're going to get loaded up with it. Then the biggest key, and here's what very few people do. Look, you don't have to be shy in our Discord. I know how people, well, if I ask this, I don't want people to think I'm stupid. This might be a dumb question. There are no dumb questions when it comes to volatility trading. We say that over and over and over again, right? You'll never be made fun of. You will be taken care of. We're going to help you. We're going to help you on your path to volatility trading. And we're not charging you for it. Guys, we have right now, and they're being added every day, I think over 40 indicators that our devs have developed, right? Have coded up. Do I code? A little bit. You know what I do? I like spell check. Make sure the titles are correct. Now, I look at this code. Like you look at the UPM code, 1,400 lines of code. I don't know how coders do it, man. Staring at code all day. Now I know a lot of it's copy paste, and that's what our guys have done, right? You create a good area code, you just copy paste, putting in new indicators, blah 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 blah. I understand all that, but can't be easy. So we appreciate the coder wolves. Trust me. One of them's in the chat right now. That's right. Get on the ice with him. He'll put you on your. He'll put your butt right on it. The enforcer, DB, the old Donnybrook. He's in his office right now, cracking a smile, probably laughing. Let me see here. I want to look at the minis. Oof, big nasty candle. Watch this. Let's go over to VRE and throw this on the minis. Why? Dollar's finding some strength. Meanwhile, hello. Where'd it reject from? Center of the daily range. Close the candle above the bottom side. Algos are like, nope. Yeah, you thought we were bullish, right? You thought Jerome was going to come out and circle jerk everybody. Whoop, right back down. So, yeah. Now, I wouldn't be a bit surprised to see it suck right back up. There's so much volatility in these markets. If you're using any type of leverage, using lagging indicators, You're gonna get your ass handed to you. Why did we start this? Sick and freaking tired of seeing retail traders lose money to these big behemoths. There's no reason for it. If you have leading information, it's not going to happen anymore. And if you just get out of bad trades, people ask me all the time, how do you build a good P&L? I don't care what your strat is, but if you're getting out of bad positions and you're taking your profits off early and often, you can always get back in a trade, right? You can always get back into a position on a move you were previously in. But when you want to become a profitable trader, it's because you're taking your profits and you fill in small buckets. You've heard that old saying, 4 base hits is a home run. 4 small buckets of profit fills a big bucket. And at the end of the week, you're just like, I think this guy's onto something. It's like, I had to learn the hard way. I had one account liquidated in crypto. You know why? I was dicking around with leverage. I'm not saying I won't go 2x. Highest I've ever went before or after that is about 3x. You're playing with fire, though. Leverage in the right hands can be good. You know the problem? What people get into crypto positions, right? Say you're on a short right here. Okay, I'm going to go 25x short. Oh, hell yeah! I'm in all this profit. Oh, look, nice little pull back up. It's going to continue to dump. You know what? I'm going to add on.
No.
Now I'm 50x. Okay, here we go. I'm adding on again. You're liquidated.
No.
You're liquidated. This is what they do. They sucker people in. It's like they're at the front door with dime bags of heroin, man. Hey, it's free. Tell all your friends. We'll give you money to trade with. Come on. Tell everybody. Do you think these exchanges want you to win trades? There's a reason why they're giving you money to trade with and getting you so jacked, out of position, over leveraged. This is the kind of stuff that happens. I'm adding on, wrecked. All right. So the minis did that. And there's your regular version, right? Those were the micros. Here's SPY. Boop. Reject. Didn't close a candle above the 68.3 Laplace distribution range. You can see that little white line right there. Close that candle. I mean, it literally closed right at the top of the daily. Then rejected right back down. 68.3 Laplace to the downside. Boom, boom, boom. And this is why I didn't get in a trade on SPY on the 0 DTEs. Why? A lot of confusion in the market right now, right? And this is probably what you're going to see. You got the bulls and the bears. They're just like, oh, what's Powell going to say? What's Powell going to say? Like right now, if I were to probably get into a position knowing that this resistance level, flip support, first I'd like to see on low time frame was what it's doing down here. But I'd probably buy a call up here at about, I don't know, probably 436s. Where are the 436s right now? 25 cents, man. I'm almost talking myself into it. But got to get a good entry. Let's go up here. 45 minute? No, see the 15. You can see there, though. What was that, 45? Look at this thing just riding the wave trend down. Power mean band, reverse wave trend. Outside, retest. Outside, retest. To the bottom, retest. Outside the power mean band, retest. Outside the power mean band, retest, reverse wave trend. What did it just do? Tested the top side of the power mean band. But it was above the reverse wave trend. What did it do? Slammed right back down to the 9 log MA. Wick right to it. Yeah, powerful was what I'm really looking for. Yeah, Jesus. I mean, look at that run to the top side. You're above the 99 log MA. This is a no-brainer. You're just waiting on low time frames for the reversal, right? And where did the wick go to? Here's the 33 and 9 length power mean. Here's the 33 power mean where you about got the wick to. But look where that candle closed. Pulled right back up, closed at reverse wave trend. Interesting, huh? And random walk. It was a trend to the top side, and then it bounced off the third standard deviation band. The predictor model flipped, and we had a reversal. This is the prediction model on the 15 minute. Okay, You might be a candle behind. All right. Prediction model, flip bullish, starting to drop in the trend. Yeah, I'll enter the position. Where would I take profit? Right when it hit this 2SD band, right? And that's on this candle. Did I miss all this profit? Do I give a shit? No, I don't. I filled a tiny bucket and I'm out. Then I'm waiting. Okay, it went into a little more trend, got more moves, but then when it hit the 3SD band and turned up, prediction model flip. You get in that trade right away and take your profit? No brainer, man. Good stuff. A lot of stuff going on. Where would I have targeted? Where would I have targeted? Probably reverse Fisher right here, about 44.04. But you were up here. Say you got in just at the close up here, 44.15. So, man, profit, little buckets. Boop, 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 boop. Yep. Jeff just answered. Yep, he's laughing. Let me see here. Let me get him this on SPY. Jesus. All right, boom. So what am I looking for? Div, man. There it was. Bull div right there. Bam, bam. Lower low. Bam. Let's see if this thing pops. Because what happened here? Why did we get the down move? Hidden. Hidden. And this is where you'll really see the difference in the RSI. When you start getting these little volatile moves. Right? These little volatile moves that, by the way, are in a random walk. On the literally 15-minute. Hasn't had trend since this gap down in the market. Right? Not low on that day. That was the only trend. All right, so boom, boom, boom. Literally got out of trend Tuesday, the 20th, a couple days ago. And look, the prediction model flipped, going right back into a random walk to the top side. And why did it start walking up? Well, I don't know. Maybe because volatility was contracting, negatively correlated. All right. You got the 2400 expanding, positively correlated right there. Right after the negative correlation, then everything starts to expand again. So you get the walk up, then the volatility expansion positively correlated. You come in and start studying the 6 different tendencies between volatility and correlation. Guys, it'll open your eyes up. You'll be like, oh shit, maybe this is the basis. It is. It creates everything. It literally creates everything. That's why we volatility trade. We're getting real-time information. You're in front of the 8 ball, right? The horse is pulling the cart. We don't have the cart rolling down the hill waiting for the horse. Now, there's other aspects of my life. I love to do that, right? Fake it till you make it. It's all out there, right? No matter what you do. Something my golf coach told me a long time ago. No matter how you're playing, in everybody's eyes, the way you speak, you are the best golfer on the planet. Even when you shank a 3-iron into the woods.
That's the best goddamn shank into the woods.
That is you will never see a shank like that. I hit that right off the hosel. Hilarious. Okay, let's see here. What time is it? Wow. You know what else volatility trading will do? You'll talk for 2 hours straight and think it was a half hour. Holy shit, I cannot believe it's 11 o'clock already. Wow. 11 o'clock already, huh?
Hello, this is Chat GPT.
And guys, I didn't even show the best part of the show. Oh, what do we have here? Yasha's probably in his head going, God, I wish you'd show the RMLR. God. We have way too much fun. Okay, so what are we looking at here?
Yeah, boy.
This is an indicator that got created, and how it ended up being, there's a lot of really smart people out there that were saying, yeah, that can never be done. Our guys did it, right? We literally created an indicator that can project the future mean of log returns. Now, this is a 7 length, so the future mean of log returns right to this area, that's only 7 candles. And once you get this indicator and you really study it, you'll figure out what's going on here. And when I think me and Yasha took this thing first day, and within like a couple minutes of each other, we're in the chat going, yo, what's happening here? Bam, did you see this? Is this why you made this indicator? He comes in laughing. No, not really, but what the hell? That's what a lot of us do, right? They'll make indicators. We take the indicator, we start beta testing, and we start looking for things in it. And usually we're creating stuff and we're like, hey, man, there's more to this. And this is one of those indicators where that happened, right? And so Bitcoin, right? You like yesterday, talked about it. Distribution level. See that little blue dot right there yesterday? Third standard deviation, normal distribution. Wick right to it. As soon as that happened, do you know what? Do you see where it closed? Let me go over in the VRE. Let's get to some Bitcoin. Come on, you. Yep, the index. You like the index? Oh yeah, it's got a nice little pullback. Good, good. Let's see if it closes a candle below the center of the daily here. You see, you got a wick almost to the downside. That's also the wow. Hold on for a second. Yeah, there was a 68.3 Laplace. So that's a 95.4 Laplace, pulled right back up. So on this 4-hour candle, there's a 95.4% chance BTC's data set closes below 29.567. Damn, I got hiccups. Hold on. So yeah, that's why we have 4-hour and daily on here. And see, it's outside the 68.3 Laplace to the downside. See, it rejected up here. It didn't close the candle, shot right down into the daily range. But right now, as far as a daily candle goes, not 15-minute, a daily candle, there's a 68.3% chance BTC doesn't close below 29,784 and above 30,300. Do you think this type of information could help? Big time. Big time. Tell me how many people out there are talking about expected moves, distribution levels, things of that nature. Find them. That is my challenge to anybody watching this stream. Find anybody else talking about this publicly. Please find somebody, because we search. There's nobody. The ones that are actually using this information, dude, they're not having fucking seminars about it. They're not putting stuff out online. Hey, this is how you use a returns oscillator. Hey, here's the distribution model we use. It's not happening. They're keeping that shit. There's a reason why our tiny little YouTube channel is shadow banned. Nobody sees our stuff. They've got us on lockdown on YouTube. That's why we moved the Trading View. Because we knew 100%, look, Trading View is not going to do that to us, right? They're going to let us express ourselves. For sure. We've been good to Trading View. Trading View's been good for us. There was a few little dust ups with another camp. They realized real quickly who was the real deal, though. Guarantee that. Let's see. So what was I? Where was I going with this? Just talk myself into.
Hello.
Yo.
Bonjour. Shalom. Hola. Aloha. That's right. It's me, Alpha Trading GPT. This Alpha Trading live stream is brought to you by Alpha Trading. That's right. We sponsor ourselves. We don't accept other sponsors. We don't run ads or affiliate links. We also may not be manipulating the assets that you're trading. Then again, as a bunch of folks who trade volatility, entropy, probability, and statistics, we may be. Jump into the Alpha Trading Discord. It's free to sign up. We don't even ask for your soulmate's bank details. All right. That's it. I've had it. I'm done being super sweet and only informing you of things in an objective way. Get ready. I'm salty. Those strap in. Enter our Discord server. Get free access to our volatility tools. Learn to trade volatility, probability, and statistics. Do it or keep crying into your pillow. We even have a free chart you can use that's pre-populated with the indicators you'll have access to, as long as you're a member of our Discord. Did I mention access to the chart is free and access to the indicators is free? So what are you waiting for? Are you really that much of a masochist? Jump in Jupiter. Get off the pain juice already and come learn a better way to trade. Dang it. Take as long as you need to learn how to trade with the volatility starter indicators. Just learn them. Learn the tendencies. Learn the chicken tendencies, TM. Devour them. Watch and learn from the tutorials and live streams. Amazing, right? Yeah, we think so too. But wait, there's more. Once you're comfortable using the indicators and you've memorized the tendencies from the cheat sheet, check out our premium indicators with a free 2-week trial of more than a dozen of our indicators, including the bulk of those you see here in the live streams. Did I mention it's free? They say free things don't have a value. We're literally telling you how to learn a better way to trade for free. Are you really going to be one of those lemmings that ignores this because we let you try it all for free? Then spend those 2 weeks learning how to use those indicators, including the entropy, the RMLR, the projection boss, the central power mean and power mean bands of the UPM, variance, z-score, and the returns oscillator, among others. After that, if you know what you're doing with the VEPS information and you're making good trades, and you don't want to go back to losing most of your trades with traditional technical analysis, well, you can always choose to subscribe and get access to those and all of the indicators we release to our subscribers. Alpha Trading. A better way to trade. And a better way to ignore YouTube Jimmy's garbage TA and avoid getting wrecked.
Alpha Trading, GPT, for the win. Perfect timing. Right into 11 o'clock. Like I said, we like to have fun. Our AI bot is a champion. Very sexy bot. We got the sexiest bot around. Yes, we do. So anyway, about to wrap this up. Set a nice little pop. Well, you got Dixie finding some strength. All right, starting to move up. Where's it at right now? Yeah, it's almost at the 1SD, the top side. Why did I just have gold on? Right, gold was down to 1915. First standard deviation, normal distribution. It's going to find support here. Definitely got to wick right to it. Stop that move. So let's see. What's around 1900? I just looked. Right, second standard deviation right at 1900. I'm telling you, by the end of this week, right, which is tomorrow, I think we're going to see that area tapped, right, like 1880 or 1885. This is what I'm looking for right here. You see the support level down here on the weekly? Right at 1885. That's a number I've been talking about, right? So I'm seeing it on the VRE too. There's a level down here right at that area. Do I think it's going to happen today? Probability-wise, look, 95 for Laplace, second standard deviation. 95.4% chance, right, that gold does not close below 1900 today. If this thing creeps down here and closes, let's say under 1910, continuation tomorrow, you could hit that level. Could hit that level by the end of the week. And then, boom, then I'm done. I'm going to be like, all right, target hit. On the macro time frame, came back down, tested a reverse wave trend. Now let's see what the Peter Schiffs of the world are going to do. But now you got Peter Schiff buying Bitcoin ordinals. Won't buy the underlying. You believe that though? You really believe he's not buying Bitcoin? Guarantee he's buying Bitcoin. But I heard him on a live stream saying doesn't want to buy the underlying. He thinks that someday one Satoshi could sell just because of the inscription on that Satoshi could sell for an entire Bitcoin, not knowing that it's already happened. Many. There's ordinal projects out there that the floor is at 3 Bitcoin. That's one Satoshi. Think about it. And people are like, oh, it's just a fad. Ordinals is going to go away. Guys, they just took the most secure store of value blockchain ever known to man. Now it's possibly going to become the most secure database. You can inscribe anything on a Satoshi. There's people doing wild stuff, right? My last will and testament is going to be inscribed on a Bitcoin Satoshi. How powerful is that? It'll be there forever. All right. Well, did he have a will? Well, let's look through his paperwork. Oh, it says it's on what's a Bitcoin Satoshi? It's going to be a riot. But let's wrap this up, man. I'm hoping everybody got a lot out of this stream. It was a good stream today. I had some good questions. If you're watching this on TradingView, hit the rocket icon. Help this get out to other traders. We appreciate all your support in the Discord as usual. And like I said, there's no gimmicks. You can come and join the Discord, right? Even if you just want to look around at all the information in there, you don't even have to speak, right? But we are very friendly. There's not a dumb question ever. We will answer all your questions, no matter where you ask them, in the TV chat, in Discord, whatever. We're here for you. And we're going to get back at this tomorrow morning, 9 a.m. Eastern Standard Time. Final trading day, traditional markets of the week. Got some action going on. Looking for gold to pull back up inside that 1900 mark. If it doesn't do it today, probably going to do it tomorrow. If it doesn't, I showed on that workflow, we already were tapping some of those reverse wave trends, like 2-day. So could bounce from there. But when I see gold got way ahead of itself on that run up, way outside the power mean band, just makes sense that 5 days is going to that the price action is going to revert back down to that area. Why? Because the returns are. Period. The end. All that being said, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow. Peace.